Welcome back for another top-notch video, guys. This week we're going to be talking about the June 11th through June 15th. As always, if you guys have a TSP account, Roth IRA, or brokerage account, this is definitely a channel for you. Please like, subscribe, or comment on the video. Also, if you guys know anyone else that would be interested in these reviews, please send them my way. Start to make money in their TSP or Roth IRA accounts. So getting right into it, let's go into what we do. So as always, if you're TSP, Roth IRA folks, just stand steady for a second. We don't go over the life cycle funds. We typically don't go over the G fund unless we're doing defensive things. Stocks are doing well, so we're not going over that. So this brings us to our funds. For TSP folks, we go over the C, S, I, and F fund. Roth IRA brokerage people, those are ETFs. For the C fund, it's going to be IVV ETF. S fund is going to be VXF ETF. I fund is going to be EFA, and F fund is going to be AGG. These follow these funds exactly, or the major indices. So the C fund is the S&P 500. The S fund / the VXF is the Dow Jones. The I fund is international markets, and of course your F fund is going to be bonds or AGG. Our very technical analysis, and with the C fund, this is where we sit for the week. As you can see, that March top, we have not topped that out yet. We are close, but we're not there, and we have not hit the February top. So we are still in a correction for the S&P 500 or IVV / the C fund, and we will have to wait and see where we go from there. It was a little bit of a positive week, which was a good thing. But overall, that's where we sit with the C fund at this time. Moving into a technical analysis of the C fund, as you can see, we have good momentum going here with our weekly charts. We have 4 positive weekly bars going up, and the price action is reacting to that. So that's very good. Our blue line is above our red line. We're hoping that we can, like I said, beat this top out on this rally. This is the first time we've been positive in over 2-3 months. Most of May wasn't even positive, so this is the first positive month energy-wise for June. On a 2-day chart, we are still up. We are, with our DO, we are sitting on the last 2 days, we're at 3.85. Now we're at 3.93, so we're still rising on this. That's positive. That's a good thing. Good place to have your money at this time, and we'll move on from there. So the next fund we're going to look at is the S fund or ETF VXF. With that fund, we are currently sitting at a new high, new rally this week, so we hit some new highs. That's good. We are out of the correction period, so we're doing very, very well with VXF. It was positive for the week. Going into the technical analysis of VXF or the Dow Jones or the S fund, we have this hit positive bars a little bit before the S&P 500, and ever since then we've had some beautiful price action here. We have 1, 2, 3, 4, 5, 6 positive weeks now from VXF, so we are really rocketing up on that. We've had the majority of our funds in there ever since the mid-May. Made some real good money on this ETF or on this fund. Doing very, very well with VXF at this time. Moving on, let's look at the I fund. So that is going to be EFA ETF, and that is our international markets. With our international markets, we are currently negative for the year. We had a major top back in March here, and we hit that top in May, and when it hit that resistance line, it went down, and we have not been able to make it back. We are bouncing between the price range of $69 and $72 ever since, I would say, mid-February. So this count really has not gone anywhere in 6 months for the year, and I would just say it's not a good place to have your funds at this time. Looking at it from a technical analysis for EFA, we thought maybe we might cross lines here. We really almost put our money into this, and then it started to decline, and now we have our blue line descending from our red line. We have negative red bar energy here, which is always not a positive thing. And of course, markets reacted. We had a really big 2 weeks ago, we had a really big down week, and ever since we've had a lot of indecision. Usually when we have a red line on top and bottom, that means indecision. So no one really knows what to do with this ETF or fund. The markets don't anyways, and when there's indecision, that's just not a good time to be making money. So we are not in this fund at this time. We'll show you that a little bit later. Moving on to our next fund, which is the F fund, or ETF AGG for bonds. Let's go into our technical analysis for that. With AGG, we have never suggested being in this fund for the year. It's just not done so well. We had one really good week here, which was kind of odd. And then, like I said on our other technical analysis we showed you, we had to fill these gaps. And we filled every single gap except for this one right here. And I don't think we will see another high out of AGG until that gap is fulfilled, but we'll have to wait and see. Not a good place to have your money at this time. Looking at it from a technical analysis from the charts, we are in the positive here, but like I said, there's another gap to fill, and like I said, we are up here, but price doesn't seem to be reacting very well here, and the reason for that is we can look at our 2-day chart, and as you can see, we are declining on our 2-day chart. We are above that line. We'll have to wait and see. We did have a positive last 2-day bar, but with this, we'd have to see positive energy to be confident in getting into the bond market, and we just don't have that at this time. That's our technical analysis. We'll go over a general overview of the markets. So price action wise, for the TSP folks out there, Roth IRA folks, bear with me for a second. For the week, we had positive for the G fund. We were positive for the F fund, which we haven't seen in a while. So that was, if you're in the F fund, like I said, I don't recommend being in the F fund. Good for you. The C fund was up just a little bit, 0.07. The S fund gained 0.5%, so that's pretty good for the week. We lost a little bit on Friday, but still a positive week, so I will take it. The I fund lost about 0.5%. And keep in mind that the I fund is negative for the year. Moving forward, our life cycle funds are all sitting right around a percent, which is not the greatest. If you look at the G fund, it's pretty close to the G fund. So it's just, you're really, this weekly thing really shows where your money should be allocated, where we've been allocated for the last several weeks, which is the C and S fund. The C fund is sitting just a little under 5% for the year, and the S fund is rocketed up to almost 9% for the year. That being said, let's go ahead and look back at our allocations. So we went through all of our funds here. If you have any questions, you could write those in the comments below. So as you can see, we don't have anything allocated to the G fund at this time. We've been sitting with an allocation of 30%, 70%, 30% C, 70% S, or 30% in IVV, and 70% in VXF ETFs. That is the Dow Jones and the S&P 500, with new allocations going to the S fund. We have this split a little bit just to have a little diversification, and that pretty much wraps up my video for this week. If you guys like the video, go ahead, like, subscribe, or share. Really appreciate your guys' support, and that's another top-notch video. We'll see you guys next time.